Have you seen your cyber insurance premiums rise this year without an explanation of why? Or are you in the market shopping for cyber insurance and surprised by the price of insurance? In this video, we're going to break down what's going on with cyber insurance premiums in 2021, why we're seeing a spike in those premiums, and what you can do about it. Coming right up. Hi, I'm Gordon Coyle, and in this video I'm going to talk about the volatility of the cyber insurance marketplace, how it's affecting the premiums that businesses pay, and what you can expect from this line of business in the near future. In 2020, the cyber insurance marketplace began to significantly deteriorate from a claims standpoint over prior years, which is leading to price increases in 2021 and likely beyond. A measure of claims performance in the insurance business is to compare claim costs against the premiums written. We call this a loss ratio. And it's a pretty simple ratio that isolates the performance for a single insurer's results or for all insurers' results in the aggregate for a single line of business. There's a certain amount of money coming into the insurance company's piggy bank in the form of premiums, and so much that goes out in the form of claim payments and loss settlement costs. Looking at that loss ratio measure in the aggregate for all insurance companies selling cyber insurance between 2019 and 2020 is a bit startling. In 2019, insurers spent 47 cents on cyber claims for every dollar of cyber insurance premium they collected. In 2020, that percentage jumped to 73%. Now you may be saying 73% isn't bad, it's a 27% profit. But it's really not that simple. Out of every dollar an insurance company brings in premium, there are other costs, of course, that need to be accounted for in addition to just claims. There's sales and marketing expenses, general and administrative costs, overhead, the cost of reinsurance, and so forth. And these all add up. But the point I want to make is that the 26-point jump in aggregate loss ratios is causing much of the volatility in the market we're seeing today. What else is contributing to volatility? Well, cyber claims continue to grow in severity, frequency, and complexity. And here's just a few statistics affecting small businesses in the U.S. For this purpose, we define small firms as those with less than 500 employees. In the small business marketplace alone, there was a 424% increase in data breaches and cyber-related events over last year. The median ransomware payment is up 52% over last year to $71,000. The average number of days of disruption caused by a ransomware event is 22 days. The average paid loss for a cyber claim went from $145,000 in 2019 to $358,000 in 2020. That's a 2.5-fold increase. The bottom line is that volatility is here and will remain for quite a while, and insurers respond to that volatility by increasing rates. Now, it's important to understand that the market does not move in perfect unison, meaning that not all insurers will increase their rates by the same percentage this year. But I think it's clear that all insurers will raise rates while still trying to be competitive in the market to capture a greater share of that market. So, what's going on with the rates? This year saw second quarter premiums increase about 25%, which was on top of first quarter premium increases of 18%. Third quarter rate increases haven't yet been published, but I expect we're going to see the same type of increase in the third quarter. In addition to higher premiums, we are certainly seeing a much more disciplined approach to underwriting. Insurers are performing external scans of prospective clients' networks, looking for vulnerabilities, asking more underwriting questions today than they were last year, and some insurers are really unable to provide the limits or the scope of coverage we saw them offering in 2020. I think we'll see cyber insurance premiums increase another 20 to 50% over the next 12 months and probably double in the next 2 years. That's my estimate based on what we've seen over the past 18 months and what we're seeing in estimated reinsurance renewal pricing and other risk factors. Does that mean it's better to wait and not purchase coverage until this levels out and starts to come down? No. Absolutely not. I don't see premiums dipping anywhere in the near future, and in fact, I don't see premiums leveling out anywhere in the near future. To go bare, hoping for a price reduction, is just plain crazy in my opinion. So you may be asking, how are cyber insurance premiums calculated? Premiums are calculated on a variety of factors. For example, your industry, your annual revenue, your employee headcount, your cybersecurity defense system, and your overall security posture. In fact, many insurers, as I mentioned earlier, will run external scans of your network and scan the dark web for compromised credentials before they'll even offer up a final premium quote. What should you do? If you've been sitting on the fence and waiting to purchase cyber insurance, get off the fence and buy it now. There are only two things I can say for certain. A, cyber threats are not going away or declining, and B, premiums are not going down anytime soon. Not having protection only puts you at greater risk of not being able to recover from a breach, hack, or attack that increasingly becomes more sophisticated. Review your system configurations and defenses with your MSP or other IT professional. Now is not the time to DIY or do-it-yourself cyber defense strategy time. An open port, a device with an outdated firmware, or a lapsed subscription may not readily be available or evident to you, but it should be to a professional service provider. Hackers can identify vulnerabilities and exploit them to your disadvantage. Now, if you see substantial premium increases coming your way, speak to your broker about it. What have they done to help mitigate that increase? Has the underwriter been engaged well before the renewal to discuss pricing on your account, and are they open to a discussion with your MSP? Is there any advice they can offer about risk control that would help lower your pricing? If your broker hasn't offered options or suggestions or brought your cyber policy out to the market for pricing options, or they appear to be complacent in the whole process, it may be time to find a new broker. Lastly, you may think that increasing your retention or deductible may help reduce the premium. I've looked into this, and the increased risk you need to assume in higher retentions just doesn't make sense in a lot of cases. We haven't seen huge price reductions for increased retentions. It's worth examining, but I wouldn't recommend increasing your retention by $20,000 to save $2,500. Here's one final word. I've reviewed a lot of cyber policies this year for a variety of prospective clients that span a huge number of verticals: construction, financial services, hospitality, retail, industrial, nonprofit, healthcare, and more. And a common problem I've seen is that you, the client, may think you have cyber insurance because you have a policy, but you may not have great cyber insurance. What I mean by that is that several times this year, we've identified clients who purchased cyber insurance years ago, and the policy forms they're on have not changed or improved over time. That means modern cyber threats are not covered. We've also seen more recent policies that don't include the broadest coverage endorsements that could be obtained for just a few dollars more per year. Finally, we've seen insufficient limits of protection almost across the board. In many instances, a $1 million limit is insufficient for the business that's insured. It makes sense to review limits prior to each renewal, benchmark where you are compared to your peer group, and then think through potential claim scenarios to determine if your limits are sufficient. At the very least, consider looking at higher limit options on renewal. The bottom line is that while cyber premiums are increasing and will continue to do so in the near future, this is valuable protection your firm cannot afford to go without. The premium increases we're seeing are not the result of insurance companies gouging customers, but really a direct result of the claims they've been paying out on and will probably be paying even more on in the near future. Have other questions or issues with cyber insurance you'd like to discuss? Give me a call or drop me an email and let's chat. I promise, no sales gimmicks or high-pressure sales techniques at all. Just some conversation to see if I can help you unravel your insurance problems and if we might be a good fit for your business insurance needs. My contact info is coming up, and you can book a call on my calendar in the link below. Thanks, and if you found this information valuable, please give me a thumbs up. Thanks.